Good morning, everybody. This is Dennis Wilborn. Thank you for joining the How to Make Money Trading Stocks webinar that we do every Friday, or most Fridays at least. We may miss one or two during the year, but every Friday at 11 a.m. Pacific time. Michael and Mike are not joining us today. Mike had a funeral to go to, and Michael is off bicycling in Europe somewhere. So I appreciate the feedback that I've been getting from folks, and I want to remind everybody that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Just a reminder that the session for both Mondays, that's after market Monday, is about a 10 to 15 minute session where we basically cover some stocks that are setting up, see what the market is telling us, getting ready to go into the month or to the week, and then Friday we kind of take a review of, okay, here's what the market was telling us, and we take a look at the market overview and also some of the entities that we had highlighted on Monday. And here basically is what we're trying to do. What we're trying to do is provide a timely, actionable intel review at the end of each week. And so we wanted to kind of like put bookends on both sides of the week, both for preparing at the first part of the week and then, you know, just basically going in and checking yourselves to see how things went for the rest of the week. So here's where we sat. It was about 9 o'clock this morning. The market has actually pushed a little higher, but is kind of pulling back a little bit. We have kind of a mixed market today. And we want to take a look at the individual indexes and see what they are telling us. Go to the weekly, daily chart on this. This is the S&P. Last week we were talking about how the S&P was in a short-term downtrend. Well, it broke out of that short-term downtrend on Wednesday. We got a slight close above, and then we pushed higher, a little bit higher Thursday. But today we basically have run into resistance at about the 2370 level, and the indicators are still fairly positive. We may get across a bullish cross of the 8 crossing back up to the 20-day moving average. And as you saw on Monday, we got a nice healthy bounce above the back up off the 50 and off of the 2323 level, which, if you'll remember, we had drawn a triangle in here, a symmetric triangle, and that if it broke, that was the downside target, and it comes down. Its low was down at 2322, and our target was 2323. Those of you who have getting really good reports on the people liking working with the whole moving average, and as you can see on Monday we get a close back, a green candle closing above a red dot or a red ball, which is basically an indication of, hey, let's go ahead and get long this market and see where it takes us. I know that some of you had took some trades on some of the stocks that we highlighted and have done well with those trades, and that's a good thing. I had a little bit of distractions going on in my life that kept me out of the market. So am I going to kick myself in the teeth for not getting into the market? No, because I know that over the course of time, for given year, there's going to be multiple opportunities to get back into trades that will benefit us. And so what I'm seeing right now is a couple of different things. Let me get my drawing. Get some drawing tools going on here. As we see, the TSI has popped up, but it is running right into that resistance at the 0 line on a daily chart. The momentum itself is just kind of, even though we've had such a big pop up, as you can see, the momentum is kind of waned and it's going to go in, it's kind of sideways right now. And for the market forecast, folks, this is a new indicator that we've instituted. The green line, which is the longer term momentum, it did start to turn back up. But the shorter term momentum indicators did roll back over. If we close right where we are today on the S&P, the S&P will be putting in what's called a shooting star, and it will also turn out to be a bearish harami on the large candle yesterday. That's a bearish signal. On the weekly charts, as you see, we have the TSI turned over a couple of weeks ago and is still pointing down. Momentum still pointing down. So even though we've gotten a really nice big candle up back into a zone of resistance, it still needs to make it back above. We still, on a weekly chart, we still have red hole dots and no green candle closing above them yet. So we'll watch this through the end of the day. If we get a close back below the hole right here, that would be an indication that we may get a pullback back, down towards the bottom. And if we draw in, there's an old adage, and I'm going to draw this in for you real quick. There's an old adage that says that when okay, we can get rid of that real quick. Remove drawing. Remove drawing. There's an old adage that basically says when you have broken out the bottom of a trend to the upside, basically, and it falls down, hits its target, and then pushes back up. Oftentimes, if the market is going to go into a downtrending market, it will come back up to that trend line that it broke through and kiss it goodbye. So we'll be waiting to assess whether or not this is a kiss off or not. Barry will get to the Russell shortly. NDX again, basically sitting up here. It pushed to a new high today, but sellers did come in at the new high and are pushing it back down. On a daily chart, yeah, the TSI came popping out of the bottom, got back above the zero line, which is an indication that this index is back into an uptrend, and since it is pushing a new high, that's what we'd have to consider, that it is an uptrend. We will keep an eye on this though, because what we may have going on here is what's called an expanded top, which often turns out to have a negative connotation. But there we have an area where that price action can work here. But until we get like a red candle closing below the green hole moving average, it's in gear to the upside, and we may just get a real brief, pull back into the moving averages. One thing to note, that this pop-up that started on Monday, with the smaller body candles happening so quickly, it's seeming like it is, well, what am I trying to say? The progress to the upside slowing so quickly can be an indicative that there is an internal weakness in the indexes. Offsetting that, please keep this in mind, offsetting that is, this is the last day in March. Well, typically the first couple of weeks in April tend to be very positive for the markets. And why? A lot of people rolling cash into their IRAs and the institutions needing a place to stash that cash. And so that sometimes can propel the market even higher. I'm taking a look at the, in my study time, I'm taking a look at the seasonality. And typically April and going into May and then sometimes into June can be positive months for the, tend to be positive months for the markets. And so we'll see what transpires here. We get a pullback back into the moving average, we breaks back up, get a similar signal here on Monday. We get a green candle closing above a red ball. The next day it takes off and does a nice little run. Russell. Okay. Russell is, in a way, Barry, you asked about the Russell, what's it showing? Actually, it's showing a couple of things. One, trying to catch back up with the other indexes that were stronger than it was earlier in the year. Overall, we are still looking at an index, remove that. We're still looking at an index that is kind of stuck in a trading zone between here and up here. There's kind of two trading zones on this one. You've got this higher one, and then you've got this level right here where it basically came back up and is slowing down. Very positive indication. It popped back up above the 0 line. That's a positive indication. It does have resistance up here in the 1392 level, so we'll see if it gets past that. And we can take this, draw this down through here, and as you can see, this short-term downtrend that it was in was broken here. But to go it back into a uptrend, we need to take out both this lower high, and then it needs to pull back and then put in a higher low, and then take off and break through it again. On a weekly chart, as you can see, momentum kind of a flat line right at the 0 line, as if it's trying to make up its mind about what to do. And then we've got the shorter term momentum indicators on the market forecast popping up, and so at this point we may be saying, hey, the Russell could have a little bit further to go. Keep an eye on, we do not have any type of sign that says the Russell is going to reverse and fall out of the sky or anything like that. And so we'll be looking for, here's a perfect example, a couple of weeks ago, where it came up, hit the resistance line, puts in a bearish engulfing, that's a red candle closing below a green dot, and then we get the big sell-off. And then we get a little bit of a pop, and with the news on the healthcare, we get a big drop out of the sky on Monday. Okay, well, something's diving. That was one of my alerts going off. But then the 100-day moving average held, and then it's progressed on up. Note here, the 8-day has not crossed back through the 20, and so for the Russell, it's, I won't say in no man's land, but it definitely is. Will this just be a squeeze on the moving averages and it rolls back over, and it could just remain in the somewhere in this trading range moving forward. Yeah, did you hear? I don't know. Did you guys hear that that alert go off? What is diving? Okay, spiders are going down. Good. IWM is hanging in there pretty well. And so that's what we're looking at there. So again, we may be getting a squeeze on the True Strength Index on the weekly chart, and we'll see where it goes from here. This is a, since this is constituted a downtrend, this is a bullish candle. It's almost a bullish engulfing on last week's candle, and so it would be called a piercing line. But the thing that draws some attention to it is that it's doing it without really getting a heavy-duty bounce with the on the momentum. Now we're doing time-wise. Okay, gotta rush through here because I'm trying to keep this down to about 15 minutes. And I'll just run through here's the stocks that we highlighted last week on Monday: WB, AIS, PRA, and you can read through those. Nugget Dust and Jung and Dust, J-Dust, are opportunities with gold. Remember, and we're expecting a late May, early June into July timeframe for gold to rally like it typically does, and then Tesla is just a gift that keeps on giving. I mean, it is doing exceptionally well. Got a good bounce this week. So the reality of trend trading: 1, know the trend. 2, define the area of interest or value where you want to take action, define the triggers, strategies, and markets. One of the things, I added a comment this week, if the mechanical side of your trading isn't working, check the mental, physical, and spiritual side. Because oftentimes, if there's distraction in these three on the bottom, it impacts how well we execute the mechanical side of that. Here's where we were sitting. We took a whack on Tesla this week on the strategy 3, but overall it's still doing quite well for the year. And I want to remind everybody, make one last reminder that today is the last day to take advantage of the lower value on lower cost on a high value, about $300 worth of benefits we provide each month with active trend trading. And so you can still jump in at $32.99. It is going up tomorrow. And I'm going to take a real quick look at a couple of the stocks. So looking at 2017 still being a season of explosive growth. We'll be starting at 12 noon with the final hour. So until Monday, aloha. Trade wisely and profitably. Let's take a look real quick at some of the stocks that we had talked about earlier. Okay, the first one that comes to mind is WB. Okay, here's Monday. We highlighted that at the end of the day on Monday. Some people went in and had already taken this trade on Monday, watching it pull back above a green candle, above a green candle in this case, but the day before was the actual trigger, which would have been Friday of last week. So we had a green candle closing above a red ball. Monday, we get a drop back down to the 100, bounce back up, and depending on where somebody picked that up, if you picked it up at the close, you got as much as a little bit over a 5% run, and right now it is in a process of pulling back into the moving averages, and so we'll see what happens when it gets into the moving averages to see if it is going to pop higher. One of the other ones we were looking at, PRA, never gave us a chance to get in. As you can see, it just pushed on up. Where's my area of value or area of interest on PRA? About the $62 level. That way, because typically when you get a breakout above an old resistance level, it'll push up, and 65 to 70% of the stocks that break out like this will come back and do a retest somewhere around the breakout level. So at this point, we're just waiting for that retest. Nutrisystems, similar type of thing, just really haven't got a retest on this yet. Momo, there we go. Momo didn't really get a huge breakout. Here's Monday, and so it just kind of moved sideways. But even so, picking up here, it did get as much as about a little bit over 5% run in it. And it's still in a very nice uptrend and respecting the 8-day moving average. And we'll do one more. Actually, we'll do two more. Tesla, we're getting a whole bunch of spinning tops at a level of resistance. So and this is a zone of resistance actually. The old all-time high was up at 291, and we've got a level of resistance here at 280, so that whole zone is resistance. If we get, yesterday we had a shooting star closing below resistance. Today we're getting a spinning top that appears to be closing below resistance, and this would be if we close where we are, this would be a red candle below a green dot, which is telling us that we're probably in for at least a little bit of a pullback. Where to? Well, you can draw this trend line up here. That would be kind of a last chance catching place, but it may just pull back into the moving averages and then pop up. So we're watching on Tesla next week very strongly. And then I will cover just one last thing. Nugget's looking, Last week I've been saying Nugget was looking really crappy or bad because it got up to the 50 and then rolled back over, but it found support there at the 866 level, and right now we're getting a green candle that appears to be closing above a red dot. And if this in fact holds, this would in fact be a higher low, which is one of your ingredients to a new uptrend. So I'm keeping an eye on that. It is getting resistance at the 20 right now, but even so, if I get a signal, I may nibble a little bit on Nugget prior to the close. So with that, guys, that's all we've got today. I hope I've answered your questions, and I hope we kept it short and sweet, and we finished in 20 minutes. Have a great weekend, everybody. I'll be downtown Honolulu next week, and my wife and I are going on a slight staycation, but I'll still be working and trying to provide information on the market for everybody. So God bless everybody. Have an awesome, awesome weekend. Aloha.